Hello, context traders. Today I wanted to talk about trading the open. We're going to be looking at April 17th, 2025 as our example. Now, what we saw here at the open was a bit of a gap up. Now, what we had coming into this morning open, we had this V recovery pattern at the end of the previous day. We saw price shoot up. It opened gapping up, but let's look at where we're hitting at this morning gap. We see this big zone right up in here, right? Just barely wicking into that zone. If we look over here on our 2-minute chart, we see that we opened above a 200 MA. We know that the 200 is one of our two power moving averages, and we opened and gapped above it, but we immediately dropped through those first 2 minutes, right? We just dropped right through. It did not hold and it was declining here. Now, we were seeing here is this big surge up. We are really up here in no man's land. We don't have any moving averages. We're running into a prior area of rejection. So, is it possible that this could have just hesitated in here and then ripped up? Absolutely. But my bias, at least at this moment, is we're more likely to see a short-term sell-off. Now, one thing that I do use when we have these gap days um, is I like to use the 24-hour futures chart, and particularly in gap days. If we open up right in close to the closing range of the prior day, you might look at the pre-market just to see if anything crazy was happening. But I really find it valuable on these types of days. And we've seen the pre-market. We saw this lunge up, drop down, and you can see right here. This is where we opened, and we're seeing this expansion state coming out of the 21 200 expansion. We're wicking under, wicking under. This right here is our opening candle. Drops, pulls back. As this one is falling off of our 10 EMA, I'm actually entering on this candle, right? And so we're entering right here in this, so we pull this over again. So right here, I'm entering on this candle as we're dropping past that bottom. So we're dropping here, boom, one candle, pull back, boom, another candle, didn't go much lower. So I'm starting to be a little cautious here, right? Like we're expecting to see three bar push at least on the one, maybe a 3 bar push on the two. But this one didn't drop much lower. Open, pulled back, still held half of the previous bar. Boom, we dropped lower. Again, we're sucking back up. I'm starting to be a little bit cautious at this point. And so when we dropped, closed, dropped, sucked back in this range, I'm out right here. Like I feel like I'm starting to overstay my welcome. Now, remember, when we're trading the open, we have to be much more aggressive in our entries and exits. This, in my opinion, it's more important to act with speed than perfect precision, making quick decisions. Now, did this bounce and drop lower? Absolutely did. And it did essentially fulfill its objective, which is to close the gap. Right. So it did fulfill the objective here. We gapped up, right? It got into close that gap. Price likes to be able to solve those inefficiencies, fill that circuit, and it did coincide with a 21 bounce. But I decided to get out here just in case this didn't get all the way down. It's close enough is good enough for me. So trade one in out. Right. 1, 2, 3, 4, and minutes and a few seconds. We're done. Okay. So done with trade one. Now, trade two, what am I looking at here? Well, I'm seeing a rising 21, a rising 21. We saw all this power coming in. Where are we at on our Fibonacci, right? Fibonacci, we're in between the 38.2 and the 23.6 area. We have this area right in here as well, the structure that we're tapping on the top of. So we have a lot of evidence, a lot of confluence to think that we're going to bounce and go back up and maybe try to challenge that high range. Right? So we get back in here, we get into this 21, we see 1 down, 2 down, bounced off, 3 bounced off. As this one is coming up, I am entering on this candle right here. as we are rising above that 21, I'm trusting this candle is going to clear, and I'm just setting my stop. My stop is going down here, but honestly, if this thing falls and crashes below the 20, I'm hitting the close button. I'm out. So we see one push up, two push up, and this one starts to fail. And again, early morning, first 15 minutes, we often talk about 4 minutes, no follow through. Early morning, 2 minutes, no follow through. Typically, I'm out. Let me bring you back to the 24-hour chart and see what else we had going on here. We pushed right back up into it. What do we have? Overhead 21 coming down, right? So we're banging our heads. Boom, one, two, I'm out. I didn't even wait for this third candle. Third candle actually did try to go up again and then dropped. If I had held for that 3rd minute, I'm definitely out there as this one's falling. Okay. So quick play, just taking that initial surge. If we don't see this just 2 minutes ripping through, trying to cut, I might hold, then waiting to see if we get a little catch here. But because of these early morning plays, I'm not taking that chance. I'm getting in, I'm getting out, taking my money, running. Okay. And so I'm out quick on this trade again. We got 444, 75 ish, 80-ish right here as we're rising, and we're out right here, or 45, 80-ish. So, it was between 90 cents and $1, depending on your fill. Quick trade, couple minutes, take it and go. Now, also, we are running. One thing I would caution is because it is easy to think that this first one could bounce and just keep ripping up here. But we did have these inefficiency zones right in here that we're kind of running into. So it runs out of steam, right? These zones you can see multiple times. So these are areas to be looking for. I have made these mistakes in the past. I have since rectified those. I'm willing to get out quicker now, take the money, take it and go. Now we see the next trade setup. I did not entertain this short just because of the power coming up. It absolutely could fall down in here, and then I'd be looking more for a tuck play. But I was not interested in that particular setup at the time, even though we did have kind of an inverted H pattern here dropping back through. Not the trade for me given the context of the situation. Right. So let me clear these off. Now, this trade here, what do we have? Right? We have rising 21, rising 21. We see again our fib zone, right? Same area, triple five, 5, 10, 15. Each of these wicks pushing up more, pushing up more. So we see this one drop a little bit lower, this bar right here, a little bit lower than that area. That's often a good thing, right? We see it sweep that low of the day just by a few pennies, snap back up. As this bar is opening and rising, we are in right here. Okay. Now, if you missed this entry here, it did come back and retest. You could have caught this bar just about the exact same price point, or maybe if you weren't quick enough, you catch it as it's rising. That's fine. I like to, particularly again, early morning plays. I'm a little bit more aggressive. Um, honestly, I almost clicked it right here as this one was rising, just thinking I would drop my stop just below that wick, but I waited just in case. It pulled, stopped, hesitated for a few seconds. Boom, I'm in. Take this up. We got 1, 2, 3 minutes. We're hesitating. We pull back. This one's not getting any higher. Not getting any higher. I'm out from this bar right here. Right there. So this bar is hesitating in this area. I'm out. I'm done. It did wick a little higher. We saw this push back down in the 21. And again, it tried to come up a little bit again, but now we're seeing it's exhausting, right? We're not getting higher. We're not getting higher. We're dropping below. Falls down. We drop below. right here is probably the best trade of the morning. If you're not super quick on the trigger on these earlier trades, this is your money maker right here. This guy is gold. He is screaming at you, take me and take the run. Okay. So what do we have going on? We have failure at the 200, failure at the 200, right? We can't push through it. We can't get higher. This price needs to explode. We need capitulation. We need that bam. We need that power surge up, and then it can rest on top. And this 21 would keep coming through this narrow state. It would cross over and catch price, and we keep ripping. We did not get that. We're getting this failure, failure, failure. Now, could you take the a short up here? Absolutely. Um, However, I would wait to see if this area of support wants to hold out, right? So we had that gap area. Now, one thing I will say, this is not hard and fast rule, but if price had dropped a little bit lower and then sucked back into the range, I would be then more interested in potentially seeing this go up. Again, not 100%. Don't take this as an absolute trigger to buy. But oftentimes, if we're going to continue to move to the upside, right, we get a little bit of a sweep of those midterm lows, knock out some stops, generate some liquidity, then we can keep it going back up. The fact that this failed right here could mean power, could mean that there's defense sitting up earlier, or what I find oftentimes is it means we return to that area again. So actually, this bounce here, I'm thinking if this doesn't clear with power, that is my short entry. Now, it could have been maybe come a little higher, could have got up into this area, right? But we failed right in this area. We have this 21 curling over, right? We have this nice wick here up, pushed it right back into the zone. So you could have caught this up here, sure, certainly, but the safe entry, right? We fall down, we close, we open, we're dropping, and this is your safest entry. Be right here, part of the bar. So as we're dropping through, if you got it up here high, that's great. You just got to sit through some of this chop and you didn't, you're in sitting comfortable, right? You're in here, your stop's up here, and none of this is bothering you. This is great. If you get in here, you have to be obviously a bit more diligent in managing your trade in case you do, because it chops around, maybe tries to cut up here again. But this looks really good, right? We got the 50, it's flattening out. 21 is curling over. Everything looks like it wants to come down and at least get into this zone. So I'm looking at this end of day wick area. Of course, we have this zone down here as well, which coincides with that 200, right? And then anything below that, if we get through that area, where are we going? All right, we're probably going down into one of these areas. This was that last guy in charge right there. Okay, so what do we have going on here? We get this entry here, we clear. Now this is your, at least on the shorter time frame, this is your change in character. Okay. So if we look at this bar shoots up, we pull back, push up, pull back, right? We can't make new highs. So these lows start to become weak lows, and then they're more likely to get taken out. If this bounce here had created a new high, then this would be a stronger point. But because it was unable to create a new high, I'm expecting that when price finally comes back to this area, it is going to breach it. And so price comes down, it bounces, pulls back, shoots down again, right? I'm probably often I'm taking off, if not my full position, a big partial trims as we're hitting this 200. Um, in this situation, it ripped right through it, bounced back under it, fell again, and it did come down and go after this last power bar out, right? So we did get all the way in to that area right there. All right, so it did wick right into it. You see where that top wick there, the base of that power candle out, it got right into that zone. Okay, so super nice, super nice trades on this morning. Pretty clean. Um, if you continued trading throughout the day, we did see another good opportunity here. We had power come back in, right? It's resting on top of your 200. We see the 21 is starting to rise. It tried to fall, tried to fall, tried to fall. It shot back out. Um, this was a pretty nasty consolidation area. So you probably don't want to play in this chop until you see price really do something, right? So you're probably looking at more of a downside bias until proven otherwise. But once we see this bar shoot right back in, this bar, bang, shoot right back up, and we clear, I would take this bar and ride this one up. Right. So another nice trade here. If you didn't catch something earlier, started your day a little later, there's a nice entry right here. I'm not going to sit here and say that I would always snag this one clear at the bottom. I would be looking for an if this then that type of situation. The fact that we couldn't get lower and that we're seeing this power shoot back in, I would be looking at this as a quick run trade. But anyways, I hope that helps you all in looking at recognizing early morning trades in the market. And remember, everyone, to always focus on context first, patterns second. Enjoy the rest of your day.